Healthcare Executive, on-ground partner, Inox.
This is TV18 and you're watching CNBC TV18.
Brought to you by HSBC Commercial Banking.
Focus, ideate, innovate, enable.
For nearly 4 decades after independence, Indian business was largely dominated by some 50 business families. And their surnames symbolized wealth, power and glory. The spirit of entrepreneurship was lacking, and the general feeling among the people then was that business was meant only for the likes of Tatas and Birlas. The trend was to pick up safe and permanent jobs either in banks, public sector companies, government offices or work for some well-known private sector companies. The first signs of change came in after Rajiv Gandhi came to power. He symbolized a new India, and this saw the emergence of a new class of businessmen. Most of them were middle class or NRIs. And this trend became more pronounced after the economic reforms of 1991. Today, you have the likes of Narayana Murthy, Sunil Mittal, Subhash Chandra, Dilip Sanghvi, Kishore Biyani, Rahul Bhatia, Vinay Bansal, who have stormed the traditional bastion and have become the symbol of hopes, aspiration and inspiration for all of us. These people have proved that creating wealth is possible even for a middle class man. The story of this week's episode focuses on one such middle class man born in a small village in Karnataka whose family lived on agriculture. Some 3 decades ago, the academically bright Ajit Rai set up Suprajit Engineering. Today, it has become the world's largest two-wheeler cable manufacturer. Take a look at Suprajit Engineering story and you know how to make it big even though you're from a middle class family.
They are the lifeline of two-wheelers and four-wheelers. Without them, a car or motorcycle is just a showpiece. Putting life into them is Bangalore-based Suprajit Engineering, India's largest manufacturer of automotive cables, producing 150 million cables a year. This 3-decade-old company manufactures a whole range of automotive cables ranging from brake cables, clutch cables, throttle cables, transmission cables, starting cables, gear shift cables at its 14 plants located in India and abroad. Suprajit has become the world's largest two-wheeler cable maker. All the major two-wheelers like TVS, Bajaj Auto, Hero MotoCorp, Honda, Yamaha, Royal Enfield and Harley Davidson depend on Suprajit for its cables. In recent years, it has begun catering to global four-wheeler giants like BMW, Volkswagen, General Motors, Renault, Nissan, Suzuki and Indian giants like Mahindra & Mahindra and Tata Motors. Clearly, catering to such marquee clients is reflected in the company's financials. Suprajit's sales have zoomed from 57 lakh rupees in 1988-89 to 533 crore rupees in 2013-14. Likewise, the net profit rose from 4 lakh rupees in 1988-89 to 47.6 crore rupees in 2013-14. Today, Ajit Rai, the man who built the company from scratch, is getting ready to move to the next level of growth. But the scene was quite different when he started the company way back in 1984. To hark back in time, Ajit was born in a small village near Mangalore into a lower middle class family. Young Ajit was very bright in his studies. After graduating in mechanical engineering from Mysore University, he went on to Canada to do a master's in industrial engineering on a scholarship. Halfway through his PhD, he decided to return to India as he was smitten by the entrepreneur's bug. That was 1984, but he had no clue as to which business he should venture into. On the advice of his father-in-law, he met Venu Srinivasan of TVS Group, who was a family friend. And that meeting changed Ajit Rai's life forever.
I happened to know his father-in-law very well, who was a very eminent professional. He was director of Burma Shell in India. and director of the Murugappa Group. And when we looked around for an opportunity, there are no cable manufacturers in India really of quality at that time. And so he went abroad, scouted around Asia, found a Taiwanese partner for making clutch and brake cables for two-wheelers. And that was over 20 years ago. And he was a very energetic, personable, hardworking person. Therefore, I thought if given an opportunity, he would be successful, not only as a supplier to us, but also in business.
Very quickly, Ajit got into the act. The project cost worked out around 62 lakh rupees. Here, not only his friends and relatives contributed to his initial equity capital of 6,25,000 rupees, but even TVS invested, indicating its support to the young man. Thanks to TVS support, an entrepreneur was born. Suprajit, an amalgam of his wife's name Supriya and his name Ajit, was set in Bomasandra, Bengaluru. It was the sole supplier to TVS two-wheeler bike in Suzuki. Ajit spent the first 10 years on product development and absorbing the Taiwanese technology. Suprajit was a single client-driven company and the cash registers kept ringing. Somewhere in the beginning of 2000, Ajit felt he should move out of this comfort zone of TVS. So he decided to cater to other two-wheeler giants in the country. It was tough as the company's competitor Remsons was deeply entrenched in Bajaj Auto and Hero Honda. But Ajit was very confident about the quality of his company's product. So in 2002, he approached Hero Honda, now Hero Motorcorp, to convince them to source more cables from Suprajit. At that point, it was just a 10% supplier to Hero. They agreed only if he set up a unit in Manesar, Gurgaon, where Hero's plant was located. He readily agreed. Today, Suprajit is the largest supplier to Hero Motorcorp. In the case of Bajaj Auto, a chance 15-minute meeting with Rajiv Bajaj in 2003 proved to be very beneficial. But like the Munjals, Rajiv Bajaj too asked for Suprajit's unit to be located in Chakan, Maharashtra. Here too, Ajit readily agreed. With all the two-wheeler majors as its clients, the company kept growing bigger. Today, Hero Motorcorp contributes 18% to its turnover, TVS 14% and Bajaj Auto 15%. What proved to be the game changer for the company was its acquisition in 2002. It bought out Shah Concabs, a cable-making company based in Vapi, Gujarat, for 5 crore rupees. This acquisition not only enabled the company to penetrate the LCV and HCV segments, but also made Suprajit the largest cable manufacturer in India, overtaking its biggest competitor, Remsons. All these moves saw Suprajit cross the 100 crore rupees revenue mark in 2004-2005. Through all these changes, Ajit never lost focus on the bottom line. This is why the company's operating margin has remained a constant 17% over the last 8 years.
See, ultimately we are able to maintain this EBITDA level constantly for several years, and that is also, it is not easy to maintain EBITDA level constantly for several years. It's through by way of making it like very prudent way of managing the cash as well as financials. And we used to borrow from the banks with a very competitive rate of interest, and we'd get for any capacity expansion we used to have 75% borrowings from the bank as well as 25% from the internal accruals. We used to balance the funds and manage the funds, and we generate cash every year. This cash is deployed appropriately with the balanced way of managing the fund.
A strong balance sheet saw Ajit setting his sights even higher. He scouted for acquisition to enter into the four-wheeler segment. As luck would have it, in 2006, CTP Gills Cable, the group company of Kaklo PLC, which Suprajit already had a joint venture in India, was up for sale. This acquisition gave Suprajit an entry into the four-wheeler market in the European and North American markets, as CTP had clients like Toyota, Land Rover, General Motors, Jaguar, Nissan Motors and Volkswagen. The timing was right and proved to be a great de-risking strategy. Post this acquisition, exports started looking up. From 1% of turnover in 2001-2002, exports today contribute 14% to turnover. Similarly, the four-wheeler share in turnover has increased to 29% from a mere 2.5% in 2001-2002. Further, the company has broad-based its offering with new segments like the non-automotive sector, where John Deere is its major client. Besides, Ajit also sees great promise in the aftermarket segment.
We expect the two-wheeler growth to happen in a level of about 9 to 12% in the near term, that is in the course of next 3 years or so. So two-wheeler volumes we can surely pick up. Also, more and more vehicles being brought into the market, the spare parts requirements for the through the OEMs are increasing, and also we can also reach the aftermarket space also ourselves, so which we are doing it already, and then more and more we can go into that. And also automotive export is seeing a big growth, and non-automotive space also is looking up very much.
Today, Suprajit is firing on all cylinders and the road ahead seems very smooth. On that positive note, time for a short break. When we come back, we talk to the 55-year-old Ajit Rai to find out how he plans to maintain the leadership position. Also joining us on the show will be Sandeep Uppal of HSBC. Stay tuned.
They are the trendsetters who are driving change, leveraging opportunities, and creating wealth and value. CNBC TV 18 presents the Young Turks Conclave 2014, powered by Chintels, with India's internet heroes who are transforming the internet economy. This September in New Delhi.
Powered by Chintels. Luxury partner Rado. Associate sponsor Exide Life Insurance.
I was more than just a coward, I was handsome too. I felt nothing when your flood came down. Holding fires that made me wonder if the lights were wrong. With my hands that never touched no ground. When you're telling
1 lakh Eco Sports sold. Get yours now.
times you're gone.
RR Kabul presents CNBC Awards Real Estate Awards 2014.
अगर आप एक डेवलपर या बिल्डर हैं और आप चाहते हैं आपके प्रोजेक्ट बेस्ट प्रैक्टिसेस आए दुनिया के सामने, तो हिस्सा बनिए रियल एस्टेट के सबसे बड़े बेंचमार्क का। आइए करें उनका सम्मान जो दे रहे हैं देश को नई पहचान।
नॉमिनेशंस के लिए एसएमएस करें REA 51818 पर या लॉग ऑन करें www.realestateawards.in.com पर।
Presented by RR Kabul. Wire nahi, Bharat ki nabz hai hum. Associate sponsor Prayag Sanitaryware and Singhs. Touching life every day. Research partner Liasis Faraz. Magazine partner Better Interiors, Property Observer and Estate Avenues.
Every headline is screaming that we are at all-time highs. Should all-time highs be linked to a particular index number or on a valuation number?
In the last 7 years, Amit, you've done only 5 investments,
yes,
and that by all measures is a very, very slow pace.
Yeah, I agree with you.
Why is that?
Are you overcautious? Criticism. Well, are we overcautious? Maybe we are overcautious.
What sets apart private equity from any other portfolio investor or a mutual fund? If at the end of the day you're also going to invest in, amongst the top 100, 500 listed companies.
The problem really is that there is a structural issue in India which forces private equity to look more aggressively at listed companies than it does in other markets.
Lots, offices, flats सब है 99acres.com पे, जहाँ बना बाबर रोड, हुमायूं रोड, अकबर रोड।
प्रॉपर्टी जो बिकती है पहले ही यहाँ दिखती है। Buy, sell, rent at 99acres.com.
India dreams of self-reliance and supremacy, but millions of Indians still live in darkness.
हमारे गांव में लाइट उठता हूँ, टीवी देखते, किताब पढ़ते।
We look for solutions to India's energy crisis.
It is Toshiba's commitment that we will bring light to the lives of the Indian people.
Toshiba presents Lifenology for India, light every home. At these times on CNBC TV 18.
Welcome back. It may have been the initial one-person luck that set the path of Ajit Rai, founder of Suprajit Engineering, when TVS Motors opened its door to him by making his company its sole supplier of cables for its two-wheelers. He used that springboard to prove his business acumen and skill. Veena Krishna caught up with Ajit Rai, MD and CEO of Suprajit Engineering at his factory in Bangalore to find out how he managed to grow the company twice the market growth rate. This is what he has to say. Take a look.
Mr. Rai, Sandeep, thank you for joining us. Mr. Rai, you came from an agricultural family. How difficult was it to start a business when you did not have any godfather, no family in the business?
In the family, there was nobody in the business. But I think I had a passion to do something on my own. It was more an internal thing that I wanted to do something that is different than what anybody else has done. I would say that fire was the one that is responsible for me to start looking out and try something on my own. Although when I came back from Canada, my parents said that why don't you try for a job, and I did have a job as well. But somehow, back of my mind, I wanted to be on my own.
Okay. So what would you say is your most important strategy that saw Suprajit growing double the market rate and even in a slowdown, during the slowdown?
It's again going out of our comfort zone. One of the things that I always felt that it is essential for a first generation enterprise to succeed and continue to be successful is to de-risk the business. You cannot depend on one customer, you cannot depend on one product or one sector or one group of customers, because anything can happen. I know after starting with TVS, a lot of people just said, okay, TVS is a great company, truly great company, I've got the greatest of admiration for them. But then a lot of them depended on one, and then you also then go with the ups and downs of the business with that customer. We said we must de-risk our business. By de-risking, I said that I'm in one location, one customer, one sector. I want to become multi-location, multi-customer, multi-sector. By that, we wanted to move to new two-wheeler customers, we wanted to go to the three-wheelers, the four-wheelers, the automotive, the non-automotive business, go into the aftermarket. So there is a very clear plan, a vision that Team Suprajit will de-risk our business going forward. By de-risking, we meant going out of Bangalore, meant going out of the current two-wheeler sector, going into the new customer segments. And the team always worked very closely to, aspire to do that. So that's how I think we have been able to get these customers, their comfort and confidence and their business. And as that happened, obviously our share of business grew and we grew much faster. In fact, in the last 30 years, we have grown a CAGR of 30%, both on our top line and bottom line, whereas the industry has grown probably at 8 or 10%. So it's probably like 3xing, on a long period of time. Yeah.
But you still stuck to one product, automotive cables, for close to more than 2 decades, and cables are a low margin even though high volume product. So why was that?
Again, there is a saying, right, jack of all trades and king of none. We wanted to be king of cables. And I think it is okay to have multiple components as long as you have got scale and positioning within that. There are large groups having multiple segments, but they are leaders in every segment. Under that condition, it's fine to have multiple products. But we are a startup. I am a first generation entrepreneur. I don't have a deep pocket like the big industry houses. So I need to make sure that I get a dominant position in what I am doing. And once I'm in that dominant position, we can also look at new products. Today, we are certainly looking at beyond cables.
Okay, Sandeep, as a banker, what would you say are the strengths of Suprajit today?
We like the whole product on quality. So the whole focus on quality is ensured that they've kind of grown year on year with their key customers, and the margins have been kept pretty much steady over this period. So that kind of has made the company stronger because they stuck with the product line, they grew the market share in that, they stayed close with customers, expanded the customer base. There are 15 plants, they dominated, you could say, two-wheelers, which is a good steady business because as we've seen over the last 24 months also, four-wheelers have come down, but two-wheelers have kind of kept themselves steady. At the same time, they kept an eye on exports. I think 18% is exports. So they got themselves into a position, strong core, business model, dominant in two-wheelers, growing in four-wheelers, growing in exports. although Ajit didn't mention, I think the financial management has been very conservative and very strong as well. We see the numbers of the company, top line, very steady growth through the cycle. Margins have been kept steady. And it's been a creep on capex, so it's not that they've gone and blown up the cash in any particular year. It's been a creep on, so while they've earned, they've kind of invested. So the gearing levels are fairly manageable. And other than me saying anything about the company, I think it's quite good to reflect and see what's happening in the market. It's a listed company, and last I saw it was trading at 6 times book. So I think it's all been a really good journey so far.
Today, you also have a major export thrust, You have a global major like Volkswagen and BMW who have become your customers. But how difficult is it to convince global customers to buy your cables or your products?
I think the India story was somewhat easier story, because once you are supplying to a TVS, a Bajaj, or a another Eicher or a Tata Motor or a Mahindra, everybody accepts you as a supplier. But the global scene is different. Whatever my status or the team Suprajit or Suprajit's status in Indian market has no relevance to the Western world. Their yardstick of expectations are different. It is not that we cannot supply, but then their expectations are different. So there was a huge gap between what they were expecting and what they thought that we have had. And it took a long time. I mean, initially when we set up our first export-oriented plant, we thought that within 1 year, 2 years, we will do, 5 years, we will do 100 crore sales. But when we really realized the expectation of the customer, we realized that we are nowhere near, because there was, first of all, a barrier to even to entry. I know Volkswagen, for example. We went there nearly 7 years ago first time and went on knocking their doors. Despite our best of efforts, best of presentation, everybody going and making us offers, making them offers, they were never convinced that Suprajit can deliver. But they knew that we had something in us. The persistence was there. So when their Chakan plant, first time when they entered India through their Chakan plant, they said there are some 10, 15 or 20 suppliers in India we want to develop for our, as a first core group of suppliers for the Volkswagen India plant. They said, will you be supplying? I said, of course we will supply. So they never took us first to the Western world. They made us to supply all their cables requirement for their plant in Chakan. And after 1 year, the whole thing changed. We had single-digit PPMs, which is like unheard of in a proprietary item. And they were fully convinced, yes, these guys can deliver. I think that is a long-drawn process. If any auto component manufacturer thinks that we can get from an Indian business to a global business in 1 year, 2 years, I think they are all mistaken.
Okay. So, Mr. Nair, what would you say are the growth drivers for Suprajit in the next 5 years?
Global business is very significant. I think the business of cables alone worldwide is probably close to $4 billion. We are just a $100 million company today. And can I get 10% of that business? That is 4x from where we are today. For that, I think it is necessary for us to definitely have tech centers in various places, warehousing facilities, probably manufacturing facilities. So the next growth is that, okay, we are king of cables in India. What does it take for us to become king of cables in the world? That is a long journey by itself. So I think within the cable, there is a significant opportunities to grow, both in the automotive and in the non-automotive business. Even in the non-automotive business, the current suppliers of cables to the global majors like a John Deere or Kubota or all of them are West-intensive suppliers. That means to say that they're high-cost suppliers. So we have a lot of opportunities there. That's what we are today, capitalizing on. That's on the cable side. At the same time, there is a significant aftermarket business that is both in India and in the world as such. We have set up, a pan-India network of distributors. We believe that there's a big business that we can get a decent share of business with. Similarly, global aftermarket business. We are currently talking to somebody with whom we are going to likely to tie up for trying to see how we can, leverage the global aftermarket business. So that's another way of growing our business. Then I think now that we have come to some size in the cable business itself, we'll certainly look at new product developments. I think it is certainly a part of our growth plan, our de-risking plan, that in the next few years' time, we should have at least one, if not more, significant new product which will be a significant part of our sales. This could be through a joint venture, this could be acquisitions, this could be an organic product development, because we are setting up a tech center in Bangalore now. So these are all the plans of strategy. So we are looking at multiple growth triggers, and we are hoping to push as many as possible to see that we continue to grow the way we have grown historically.
Okay, so what message would you give a young entrepreneur who has just started off his business?
I think believe in yourself. It is important that you must believe that what you are doing is right. He or she should be able to put themselves in the shoes of all the stakeholders. It is not my view that this product is great. Will my customer think it's a great product? Will my supplier supply what I want to do? Will my employees be happy? Will my shareholders be happy? Will be able to get funding for that? So any idea of an entrepreneur needs to be looked from different points. And more than that, the first generation enterprise should always not try to do giant leap. It's good to have a big group to take a mega mergers, mega acquisition, mega plans. But a first generation entrepreneur, you have limited wallet. You don't have a deep pocket. So you need to make sure that you can have a big dream. I always will say dream big, but take measured steps to realize your dreams.
Okay, thanks a lot, Mr. Rai, for joining us. Thanks, Sandeep, for joining us.
Thank you very much for having us on this show.
Well, that was Ajit Rai clearly articulating his growth strategies. These are the mantras he implemented to build Suprajit Engineering. De-risking business is important for growth. Focus on creating dominant market position. Explore all possibilities of an idea. Dream big, but take measured steps to realize your dream. Dream big, but dream practically, says Ajit Rai. I agree. Before I go, here is an interesting quote from William Arthur Ward. He says, "The pessimist complains about the wind. The optimist expects it to change, but the realist adjusts the sail." To my mind, all entrepreneurs are realists. On that thinking note, it is time to say goodbye. See you next week with another interesting episode.
Focus. Ideate. Innovate. Enable.
Brought to you by HSBC Commercial Banking.
अगर आप घर से बाहर हैं, आउटडोर्स, तो कैसे ढूंढेंगे प्रॉपर्टी? पेश है खोजी डॉग्स, बिकाऊ प्रॉपर्टी सूंघ निकालने में एक्सपर्ट जॉनी, टॉमी, रॉक्सी, स्मेली।
मैजिक ब्रिक्स ऐप अपने मोबाइल पे डाउनलोड कीजिए और ढूंढिए प्रॉपर्टी अपने आसपास, कहीं भी, कभी भी। magicbricks.com। प्रॉपर्टी सही मिलेगी यहीं।
ये शो हम लोग फील्ड में जाकर, अलग अलग शहर में जाकर, वहाँ की वास्तविकता को देखते हुए, वहाँ की रिक्वायरमेंट को देखते हुए सारे शो का निर्माण करते हैं। ये कंज्यूमर का तो ध्यान रखता ही है, लेकिन कंज्यूमर के साथ में बिल्डर्स के भी एक उनकी ब्रांड बने, उनकी इमेज बने, उनको इसमें सहयोग मिले, उसको भी ध्यान में रखा गया है। अब जो नया इसमें हमने परिवर्तन किया है, उसमें कुछ शहरों का भी विशेष ध्यान रखकर तीनों का जो कॉम्बिनेशन है, बिल्डर, कंज्यूमर और पर्टिकुलर शहर का, ये ध्यान में रखते हुए शो का निर्माण कर रहे हैं।
इंडिया रियल एस्टेट गाइड प्रेजेंटेड बाय RR काबिल। वायर नहीं, भारत की नब्ज हैं हम। मैगजीन पार्टनर, बेटर इंटीरियर्स।
Are you unsure of investing in the stock market? CNBC TV 18 presents everything you wanted to know about stock market investing. A comprehensive book that compiles everything. Step-by-step techniques to investment strategies. Written in simple language. It simplifies equity investing for you and helps you learn and smarten your stock market skills and strategies. For inquiries, call or SMS CD STOCK